Hey, it's Sasha Evdokov. Thanks for joining me, and I want to share with you in this video why you shouldn't pay attention to the stock analyst reports when it comes to choosing or picking your stock. And what I'm talking about is the buy, hold, or sell evaluations, or sometimes you may hear them as overperform, inline, or outperform. Now, the reason is a lot of these reports are skewed in terms of their recommendations of the buy, hold, or sell recommendations. Now, before we get into why they're skewed and why you shouldn't pay attention to them, let's learn a little bit of how this process works and what exactly an analyst does. An analyst gets paid to evaluate the earnings or the projected move of a stock or a company. So in simple terms, let's just say if I'm an analyst and I'm evaluating Facebook stock and I project that Facebook will make $2 a share or on its earnings EPS when it comes out on the quarter, and a lot of other analysts are projecting 4 or 5 on the EPS, then I'm not really in line with what everybody else is doing. Now, if I am correct, I will get to keep my job and I'll probably get a huge fat raise because Facebook may not have done as well as it did. Now, on the other hand, if everybody else was right and I was the one that's wrong, then I'm going to get fired. So this is the problem. If everybody else, it's kind of like the herd mentality. If everybody else or every other analyst out there is projecting in terms of a $4 move in Facebook or a $4 on its earnings per share, and I'm only projecting 2 and everybody else is right and I'm wrong, then I'm going to get burned. On the other hand, if I am correct and everybody else is wrong, then I'll get a raise. But the fact is that I want to keep my job and I want to make sure I'm getting paid, because at the end of the year, all the money managers get to evaluate these analysts and who they like the best. So the point is that these analysts, what they do is they start these targets off. Somebody will say $2 a share. The next guy will say $2.10 a share if he believes it's higher. The next guy will say $2.30. The next guy may say $2.40. So they slowly start changing and adjusting these over time. And what you really need to pay attention to when it comes to these reports, and what you really should be focusing on, is how often they change these reports. Now, they don't like to do it too often, but they will do it if they are starting to see an incline or rise in the stock and they see huge momentum. But the problem is that they're still trying to be in line with all the other analysts because they want to keep their job. So this is really what you need to focus on when it comes to looking at analyst reports, is seeing what their guidance is on the earnings per share, and then taking that guidance and seeing how often they change it for a certain stock or a security. Because the more often they change it or adjust it or raise it, that's really showing strength of a certain stock or a certain analyst report. Rather than looking at just a buy, hold, or sell recommendation, you're looking at how often these analysts are adjusting their reports. Because keep in mind, they want to keep their job, and they get big fat bonuses if all the money managers are typically going to them and saying, you're the analyst I want to go with. Also, a little side note is a lot of these money managers cannot recommend a stock, most of them. Most of these brokers cannot recommend a stock if it has a sell rating. So rather than these analysts adjusting their rating from a buy to a hold or a sell, they'll start lowering their guidance and estimates. And this is what you can see when stocks start weakening. So instead of them going from buy to a hold or a hold to a sell, they'll just start lowering their estimates from $3 a share to $2.75 to $2.50 to $2.25 and so on and so forth, until the point of where they almost are forced to change the recommendation from a hold to a sell or from a buy to a hold. So keep this in mind, why a lot of these reports are skewed and why you really shouldn't pay attention to these analyst reports in just the fact of plain and simple buy, hold, or sell recommendations. And instead, what you really need to be focusing on is how often the analyst is changing its reports or its earning estimates. Thanks for watching this video. I hope it was insightful, because most people do not understand how these reports really work or function. But this is the key. This is what you're really looking for. Keep in mind that of this herd mentality, and what's happening is people's jobs are at stake and they don't want to be way outside the realm of what everybody else is saying, even though they may believe it. Thanks again, and if you want to see more great videos like this one and watch my rapid recap, then go ahead and sign up right here where you get to watch the stocks that I'm watching in the current market conditions. And if you want to see my in-depth courses that are 5, 6, 8 hours long that'll take your trading to that next level, check out some of my courses at TRADERSFLY.com. Thanks for watching, and remember to do what you love, contribute to others, and most importantly, live life abundantly. I'll see you next time.